All right, deep dive time. Today we're tackling a company a lot of you have been asking about, Afcons Infrastructure. And with their IPO on the horizon, we're breaking down what makes them tick.
Yeah, we're talking about a company that doesn't just build, they take on these mega projects, pushing the limits of what's possible in infrastructure.
We've got stacks of documents here, financials, project details, the whole 9 yards ready to uncover what makes Afcons a potential investment powerhouse.
It's like we're getting a sneak peek behind the IPO curtain. We'll see the strategy, the ambition, and whether this is a company worth betting on.
Okay, so just to set the stage, Afcons, they describe themselves as one of India's biggest international infrastructure companies, right?
That's their pitch, and their project history seems to back it up. We're talking 76 completed projects in the last 10 years alone, a cool euro 522.20 billion in total value.
Whoa. Okay, so not just putting up a few office buildings here and there.
Not even close. Think massive undertakings, India's longest railway tunnel, for one. A huge project in the Maldives, their largest international venture to date.
They've worked in 15 countries, right? That's a global footprint.
Exactly, and it's not random. Afcons strategically targets projects that align with broader infrastructure trends. For example, their work on metro systems. That taps into the massive growth we're seeing in urban infrastructure, especially in India.
Smart. They're not just building what's needed today, they're anticipating what the world will need tomorrow. But let's back up for a second. Can we talk more about that Maldives project?
The Mail to Philafushi link, yeah, it's a beast. 6.7 kilometers of bridges and roads, including a 3.7-kilometer marine bridge. Basically, they're connecting Mail, the capital, to an industrial island, Philafushi.
Hold on, we're talking about building a bridge over the open ocean. How does that even...
Engineering marvel, right.
Uh,
And it's the largest infrastructure project in the Maldives history. Think about the logistical challenges, the marine environment.
and they're the ones making it happen. That's got to be a good calling card.
Definitely signals their capability to handle massive, complex projects. But it's not just about this one project. They've got serious equipment. Mahakaya and Samrat, for instance, are these huge jack-up barges they use.
Jack up what now?
Okay, so imagine these giant platforms that can lift themselves out of the water. They use them for building bridges, piers, all sorts of things. Pretty wild stuff.
Sounds like it. And then on top of that, I was reading about their investment in innovation and technology. It's not just brute force construction with these guys.
Definitely not. They've got a dedicated knowledge services group, a whole talent management academy to train their engineers.
So they're investing in their people as much as their equipment.
Exactly. And get this, they even have an NABL-accredited weld coupon testing lab, the first of its kind for the Indian Railways, I might add.
Oh, what lab now? Sorry, you lost me at Weld.
It's very specific, but basically it's a high-level quality control thing for their welding. Shows their commitment to meeting really stringent standards, which is important in these large-scale projects.
Okay, so they're clearly not afraid to invest in the future, both in terms of tech and their workforce. But all this ambition, innovation, it's got to be backed up by solid financials, right?
That's where things get really interesting. A company can talk a big game, but the numbers will tell us if they can walk the walk.
Yeah, and with their IPO coming up, those numbers are more important than ever. Investors want to know if Afcons is the real deal or all hype.
Right. We need to see if this is a company built to last or if it's all built on shaky ground.
So, with that in mind, let's dive into those financials and see what secrets they hold. Is Afcons truly a company of the future? Back for more of the deep dive. We've seen the impressive projects, the global reach. Now it's time to put on our green eye shades and get into the nitty-gritty of Afcons financials.
Time to see if those balance sheets are built as strong as their bridges, right?
You got it. So where do we even begin? We're talking about a company that deals in billions of rupees.
Well, a good place to start is their order book. Think of it as a sneak peek into their future earnings. It tells us the value of contracts they've secured, work that's lined up.
Okay, so like a restaurant, a fat stack of orders means business is good.
Exactly. An Afcon's order book, as of September 30th, 2023, stood at a hefty 348,883.90 million.
Whoa, okay, we're not talking about a little mom and pop shop here. That's a whole lot of zeros.
Right, projects lined up for years. But it's not just the size, it's what's inside that counts. Geographical spread is key for a company like Afcons.
Makes sense. They're not just building in India, right? Got that international presence we talked about.
Exactly. Right now, about 75% of their order book comes from projects in India. The remaining 25% is spread across those other countries.
So a good balance, tapping into India's growth story, but with eyes on the global stage too. But their projects, it's not all bridges and tunnels, right?
Yeah.
I saw they dabble in different types of infrastructure.
Oh, yeah, they've got their hands in a lot of pots. Four main business areas, actually: marine and industrial, surface transport, urban infrastructure, and hydro and underground.
Okay, so a pretty diverse portfolio, which for investors, that's usually a good thing, right? Not putting all your eggs in one basket.
Exactly. And as of September 30th, 2023, the biggest slice of that order book pie, it's in urban infrastructure.
So they're really betting on the growth of cities, urbanization, all that?
They're following the people, right? Where the population grows, infrastructure needs follow. The other segments, surface transport, hydro and underground, and marine and industrial, they make up the rest. A good balance overall.
So strategically, they seem to be in a good spot. But what about the clients? Are they reliant on a few big fish, or is it a good mix?
Another good question and super important to consider. Too much reliance on a single client can be risky, right?
Oh yeah, if that one client goes south, it's trouble.
Exactly. But Afcons seems to be doing all right on that front. They've worked with a whole bunch of different clients, government agencies, public sector companies, private businesses, both in India and abroad.
So a healthy mix, no one client holding all the cards. That's reassuring. But let's talk about everyone's favorite topic. Growth, specifically revenue growth. How are they doing on that front?
Buckle up. For the fiscal year ending March 31st, 2023, they pulled in a whopping $110,190 million in revenue.
Okay, that's a big number. Even for a company building massive bridges, that's impressive. But is it a one-time thing, or is this growth sustainable?
That's the million-dollar question, right? And it's a mix of factors. First off, they're smart about the projects they go after. We talked about urban infrastructure. That's booming. But they're not just riding a wave. They're making internal moves, too, boosting efficiency.
So streamlining operations, becoming leaner, meaner, all that jazz.
Exactly. They've implemented these knowledge management systems, standardized processes, even using digital tools to keep things running smoothly.
Smart. Can't argue with efficiency. But revenue is just one side of the coin, right? We got to talk about profitability. Are they actually making money?
The bottom line, right? That's where things get really interesting. So Afcon's profitability margins have been relatively stable over the past few years, even with all that growth.
So they're not just growing for the sake of growing. They're making sure it translates to actual profits.
Exactly. They're walking that tightrope between expansion and profitability, and so far, so good.
Music to investors' ears. But let's get a little more granular, dig into those profit margins a bit.
Sure, it's not always as simple as one number, right? Afcon's margins can fluctuate depending on the project, the specific contract terms, all that.
Okay, yeah, building a bridge over the ocean is probably a different beast than a road project, cost-wise.
Exactly. Things like the complexity of the engineering, even how much competition there is for a contract, those all play a role in their profit margins. So overall stability is great, but investors should definitely look at the profitability of different segments within Afcons, see if there are any red flags.
It's like, don't just look at the cover of the book, read a few chapters, right?
Exactly. Speaking of important chapters, let's talk about return on equity, or ROE for short. That's a big one for investors.
Right, ROE. How efficiently is Afcons using its shareholders' money to generate profits? Give us the lowdown.
So Afcon's ROE has been a bit up and down, but generally it's been in a healthy range. Not blowing the roof off, but respectable.
Okay, so not setting off any alarm bells there.
Not yet, at least. But to really understand what that ROE means, we need to compare it, get some context. How do they stack up against industry averages, their own past performance?
Okay, let's bring in the comparisons. Are they lagging behind, leading the pack, or somewhere in between?
Let's find out.
Welcome back to the deep dive. We've journeyed through Afcon's ambitious projects, those eye-popping financials. Time for the big question. Golden opportunity or potential pitfall for investors eyeing this IPO?
That's the multi-million-dollar question, right?
Yeah.
And honestly, with a company like Afcons, it's not a simple yes or no. There's a lot to unpack here.
Okay, so unpack it for me. What are the key takeaways for investors who are maybe considering putting some skin in the game?
Well, first off, you got to admire their ambition. These guys, they're not just building stuff, they're shaping the future of infrastructure, the scale they operate on. It's impressive. That Maldives project, that's a statement.
Yeah, it's like they looked at a map and said, hold my chai, we're going to connect those two islands.
But we've also seen there are some potential risks to consider, right?
Absolutely.
Yeah.
Relying heavily on government contracts, that's a double-edged sword.
Yeah.
Yeah, India's infrastructure spending is on fire right now, but Governments can change their minds, budgets can get cut, that kind of thing.
So potential for volatility there. Exactly. And those international projects, yeah, they're exciting, but they come with their own headaches. Political instability, currency fluctuations, the whole shebang.
More moving parts, more room for things to go sideways.
Precisely. And then there's the debt, their debt to equity ratio. It's manageable right now, but it has been creeping up. Something to watch, especially for investors who are a little more, shall we say, risk averse.
Yeah, got to balance that ambition with financial prudence, as they say.
Absolutely. And we'd be remiss not to mention those legal challenges we talked about earlier. Cozy properties, Chennai Metro Rail, those are still hanging out there.
Litigation, never a good look, that's for sure.
Right. And while we can't predict how those cases will shake out, they are a factor investors need to consider.
It's all part of the due diligence, the homework you got to do before jumping into any investment.
Absolutely. But let's not paint too gloomy a picture. Afcons has a lot going for it, too. Their commitment to innovation, that's huge. They're not just stuck in the old ways of doing things.
Yeah, that welding lab, for example, investing in technology like that, it shows they're serious about quality, about staying ahead of the curve.
Exactly. And that focus on training their workforce, that's smart, too. They're building for the future, in every sense.
So it's a mixed bag, right? Pros and cons to weigh.
Exactly. And ultimately, the decision to invest in this IPO, it comes down to individual investors, their risk tolerance, their investment goals.
No one-size-fits-all answer in the stock market.
Nope. And that's why it's so important to do your own research. Don't just take our word for it or anyone else's. Look at those financials, understand their projects, really get a feel for the industry.
Knowledge is power, right? Especially when you're talking about your hard-earned money.
Couldn't agree more.
Well, folks, that's about all the time we have for today's deep dive into Afcons Infrastructure. They're a fascinating company, ambitious, innovative, but not without their risks. Whether they're the right fit for your portfolio, that's for you to decide.
And remember, the best investments are informed investments. Do your homework.
Wise words. Thanks for joining us on The Deep Dive. We'll catch you next time for another exciting journey into the world of business and finance.